Let me start by just expressing my gratitude to not just this great panel, and I will say I'm a little surprised that the St. Louis Fed team asked me to join these two very sophisticated and smart folks. I'm beginning to think it's because they were looking for another foreign accent person to join them. So, but I'll take it. I'm grateful to be here with you all. But I really want to thank the team and really the regulators that have pushed these minority bank issues to the forefront. So I want to start with that. I even was very delighted to hear Governor Bowman highlight the importance of minority banks, and soon we'll hear from Chairman McWilliams, who is an incredible leader and a friend of minority banks and CDFI banks as well. So I think it's very timely and very smart to have these conversations. So I'll start with that point. One key, I guess, if I can figure out how to switch these slides. So what I wanted to point out is we've heard some of the statistics about and great research, really, frankly, that made me so happy to hear it because it almost justified my existence as a minority banker, as a banker that believes that we need a vibrant financial ecosystem that has diverse banking and financial service providers in it to maximize the potential of our great country. So you can see the research has been out there about the disparity between the lending that mission-driven banks and institutions do versus the Main Street banks. And some great conversation was just recently, just a couple of minutes ago, about why there is disparity. So I'm going to try to address some of that. And really my goal is not to convince anyone of anything we're doing is meaningful, except just remind us that I think there's a great opportunity to close these gaps. So I think one thing that was highlighted, and I'm so grateful to Adam and Preetu on providing some solutions. So I'm going to try to offer a couple of solutions that I think could help close the gap that's really setting our country back in a huge way. As research has pointed out, several trillions of GDP growth are foregone every year potentially that we could have if we enabled every person, regardless of their zip code or inherited privilege, to access credit and opportunities. And so that's why Optos Bank exists. We were founded in 1921, along with other black-owned banks, intentionally. At that time, those disparities were very overt, and I would say, sadly, not much has changed over the last 100 years. Maybe the disparities have gone a little bit underground and have taken on a shape of a systemic beast that we're trying to dismantle every day. But certainly we still face the same problems as our really courageous founders, including Modjeska Simkins, a civil rights revolutionary, was one of our first tellers at the bank just a few blocks from my office here. So we still exist to address the same problems, and unfortunately we only have 20 black-owned banks left today, and just a few years ago when I got into this field there were about 45, and there are many reasons for that, and I'll try to highlight. So of course, what's different about us? I get this question, so why do we need a mission-driven bank? You know, with the disruption of fintechs, with all the digital currency movement that's coming, you know, why do we need mission-driven lenders? So I'm grateful to these super smart researchers to justify my existence. They pointed out why we need us, and the reason we need us, you know, is essentially twofold. One, you know, if you've seen any of the blind studies, you have so imagine two applicants with identical packages, right? Identical credit scores, loan to value is the same, debt coverage is the same, collateral strength is the same, the guarantors are the same, but one has an ethnic name or foreign name, like one of us on this panel, and the other one has a majority sounding name. The research I saw just as recently as a couple of years ago showed that there's huge response rate disparity, right? So that explains some of the reasons why we need mission-driven banks that are more intentionally closing these gaps. The other reason is just the costs. So if you look at the number of loans we do to low-income communities and underserved people, the cost is not necessarily the credit cost. the charge-offs that you're going to have to take because you're theoretically lending to a higher risk customer base. It's the cost of delivering that credit, right? It's the cost. I wish I could use the really good terminology. I heard about the friction and the finding the people, but then also once you find them or once they find you, how do you actually serve them? Because as the old saying goes in some of our circles is, if you need to borrow $10,000, you're not qualified. If you need to borrow $10 million, you're qualified, right? And then $10 million loan may cost you frequently less to underwrite and process than even a $10,000 loan, depending on the borrower's circumstance. So there's a cost disparity that's driving banks that are more mainstream, that are really trying to maximize their shareholder profits. That cost is driving them to originate larger credits to more mainstream borrowers that are easier to serve. While mission-driven banks like Optos Bank and other CDFI and MDI banks are intentionally really trying to bank everyone, but especially those that are harder to bank. And so that answers one of the questions I wanted to also point out. I'm going to skip to the financials, right? So that answers the question, why do we have only 20 banks? Why are there only 20 MDI banks or Black-owned MDI banks? Which I do think it's an important distinction. If I had one wish, particularly for the research about minority banks, is to really break out the minority banks and specifically focus on Black-owned banks, because I think some of the disparities and challenges are even starker there. And so I'm living that every day. But despite that, we believe that we have to have a vibrant financial ecosystem where we can overcome those costs, those higher costs, and we can also overcome the systemic disparities, right? And so my naive belief that with the support that we've gotten from the FDIC and the fund that Chairman McWilliams championed, and all the capital that's coming into our space, we can actually overcome both of those, right? And so the systemic disparities, there's very little you can do to reverse 400 years of carefully constructed racism with even $1 trillion of loans into our economy. But you can surely make a dent. And the same thing I would say on the cost side, right? So this is where I'm going to go back to the technology. We're investing heavily in technology because we want to eliminate some of the costs. So if you look at those communities that are underserved, there's a reason why they're underserved. And so I'm going to jump a little bit to the solution. We've seen the significant interest from not just the regulators, but impact investors and others to figure out how to overcome those costs and those difficulties that were really so just blatantly and wonderfully highlighted in the research. That's just amazing to see that pointed out what happens when a minority bank leaves a community. Right? We see that. So we are now in this moment where we have an opportunity to actually start solving some of these problems, because there's an interest and understanding how costly preserving and protecting this racial wealth cap for this long has been to our country. So I believe that technology is going to have to be hugely integral to that solution, because those costs originating $100,000 small business loan is the reason why a lot of the banks, even though they would like to serve, right, as some I hear say, well, money is green, I want to make loans to anyone. But we know that in the minority communities, the borrowers, are a little bit more challenged with cash flow, capital, collateral, and just overall their credit. So this is where I think technology comes in. And then we heard a lot about relationship banking. So I do want to echo that. I think the research, like I said, I'm so pleased. It almost feels like I was justifying my own existence, because it really pointed out the value of the fact that we have frontline bankers, frankly, for a bank of our size, that we really shouldn't have. But the reason we have them, because those relationships are so important. And even with the COVID, we had people banging on our windows wanting to come in and meet with someone. Right? Even last year, a year ago, they were people literally standing outside our window. I want to come and meet with someone, because that relationship is so important to them. And one thing that the pandemic highlighted more starkly than I would have expected is the value of that relationship. We have people from large banks that thought they were banked, only to find out they were not banked because they couldn't get a hold of their banker to process their PPP loan or get other help. And so I do think that relationship and technology could close some of the gaps that have been pointed out so starkly in the great research here. But I do think ultimately it's going to come down to some level of subsidy, right? So I'm an immigrant. I believe strongly in the American dream and the fact that capitalism can solve a lot of world's problems. But sometimes there are great imperfections in that flow of capital, as the research is pointing out. And so how do we overcome those imperfections? I think that the only way we can truly credibly overcome it is going to have to force that capital to somehow flow there, provide some level of subsidy or support. And I think that's what, for example, the CDFI fund is doing, right? So I'd urge, we should have a multi-billion dollar budget for the CDFI fund because it provides the temporary subsidy to make those markets work, to make them work more efficiently and deliver opportunities to everyone, regardless of their zip code, not just a few that are fortunate enough to look like me or live in a high-income zip code. So those are some of the solutions I really wanted to focus. And the last thing I do want to go back to the whole idea of the mission and margin, right? So what I'm saying by the level of subsidy, I don't think it needs to be permanent. I do think we need to heavily invest in these gaps now so we can make those markets work a little bit more efficiently and they can deliver more capital and opportunities. But also, I think we need to be persistent with it. And as I like to say, when I was my previous bank raising deposits, that I often got the question, so what is my CD going to do? Can you solve the poverty problem with a CD? How are you going to impact the poverty? And I have to say, you can't reverse 400 years of these disparities with a deposit. You have to put some real capital and do it over a long period of time. So I think those are some of the solutions I really hope we continue to pursue. So with that, I'm going to pause, and I'd love to hear questions and challenges to some of the things I mentioned.